Hey traders, today is Wednesday, February 4th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the Australian dollar. On the back of this week's rate decision on Monday, the RBA did deliver a 25 basis point hike as expected, taking rates to 3.85%. Came out a little bit more hawkish, with underlying strength in the economy. They noted that inflation had picked up materially, and it looks like markets are pricing in nearly a 90% chance that the next rate hike will be in May of this year. For the Aussie dollar, we've now rallied into uptrend resistance for a second consecutive week. This is a pitchfork that we've been tracking off the lows from back in November. You can see that that stretch last week took out the 2024 range highs and now stuck right into this slope, with the monthly opening range taking shape right below. Momentum is in overbought condition, both on the weekly and the daily. So the momentum profile still remains in favor of the bulls, but we're looking for a reaction at that slope over the next few days. Also, on that last stretch that we got on the breakout back into the late January trade session, that was the largest single week advance that we had seen since the lows registered in 2025. Privy to that was the low that registered back in October of 2023. In both instances, you did see resumption or continuation of the breakout stretch. So the bulls have it, but we still need to clear this critical pivot zone on the slope for the upside. Initial support from the weekly standpoint comes in right at the 2024 range highs. That's 1642. We're looking for support over there over the next couple of days. Here's what it looks like on the daily chart. Monthly open materialized right above near-term support. Again, you got the 2024 range high and a basic 38.2 retracement just of this month's, or excuse me, the January trading range. You can see that a near-term slope just off the lows from August and November of last year, the 75% parallels converging right there as well. That's going to be your key support on the near term. On this stretch right here, the rally is testing the high day close from January. So last month's high day close comes in at 70.50. Ultimately, we would need to see a break and a close above 70.77. That's the 2023 high day close to really mark resumption of the next major leg of the advance. You're looking for 71.36, the 2023 close high, and then a key resistance zone. The next major technical consideration is right into the 72 handle. That's the 618 retracement from the decline from the highs that we made all the way back here in 2021, and it's the 100% extension of the advance off of last year's low. Here's what it looks like on the 4-hour chart. You can see pretty clearly here that the weekly opening range is taking shape right above support. Initial focal break is going to be that 70.50 zone right into 69.29. Looking for a breakout there for guidance. We're not an overbought in the 4-hour chart, so you don't have the immediate thrust of the upside in momentum just yet. So we'll be looking for a break there. We do get ADP out of the United States today. We get some sentiment data out of the University of Michigan into the close of the week. So you'd still have some event risks that could tilt things up or down in either direction here. Focus range break there. If we were to break lower, below 69.29, max losses would need to be limited by 68.37. There's a confluent zone there as well. It's the 38.2 retracement of the advance off the November low and the key 618 retracement of last month's range. If Aussie is heading higher on this stretch, losses should be limited to 68.28, 68.37. And again, we need to see a confirmed daily close above 70.77 to get that next major upside move in the Aussie dollar. As always, we'll try to keep you updated on MB Forex. Till then, best of luck trading. We'll see you tomorrow. Cheers.